to week 47, sort of coming towards the end of February, and next week sort of the annual, first year of live trading for me. But this week I just want to get into a gold trade. I think when gold started to rally and sort of how I didn't trade it very well, and it's sort of more of a metal thing than sort of a risk move. But I just want to go through that, some of the execution from last week, some self-talk and journalytics as well, sort of reviewing last week, sort of more of a steady week, and just some 3 pointers from sort of my weekly review that I put down. But this week, this trade was gold just after the bank holiday, Monday. I know the writing you won't be able to understand as normal, but I'll be able to go through that. So we had an inside day, we had an open that tested into the value of the bank holiday. And what I was thinking is that as long as you stay above this sort of low volume zone that you have, my idea is to obviously come down and then rally, and we target the big high that we had. I think it was a one daily high. Obviously, coincided that you had you have this sort of range, and you're looking to break out of that. And then, so this is what I will always do. Also, at the beginning of the day, I'll write down my predictions. So I'll screenshot, after I've done my morning prep, I'll screenshot and then draw exactly what I think is possible, even in both direction. Or if I have more of a one-day bias sort of thing, then I'll just stick to that. And then at sort of the end of the day, where I'll then do the same thing, and then just see how I compared to what my ideas were. To if they didn't, and then you can sort of play on why. But the same scenario, we then held value much lower, sort of balanced it out slightly, and then once we rallied in the afternoon, way past the target that I had for the day, and you just had a complete continuation. So to me, I would have been targeting here anyway, and it would have still gone another point or so past. But the whole technical view of it, of you having the inside day, you're holding out, the open is there, and you sort of have a risk off sort of move, which is all handy when I can't exactly remember if the S&P was coming off at the same time. I'm not entirely sure it was, because what I think we've had at the moment is that you had the big explosion in gold, and now gold can't go any higher, and then you see in the S&P come off, especially this week, and gold is struggling. But this is obviously the big technical picture we had beforehand, before we had all the big move where you think that gold's going to keep rallying and you haven't really got any buyers, etc. now, because obviously we've taken the big high. Taken the big high and gone into like yearly highs from like 2012, 2013. But this is on a 60-minute, scrunched up 60-minute. You had a big triangle, and you had loads of consolidation through. You have this sort of grind up move we had, where you're getting a lot of choppy, messy moves. You're not really getting any like key breaks, except you sort of did here. We sort of overnight was the Monday. We gapped outside, a small test in there, and we sort of grinded up, and eventually we sort of exploded in the cash. Big key support we had down here, so sort of this area is your big key zone. Some more here. Just looking for different areas you want to just be looking at to then structure your move to the upside, where to me I always find that when having a single high is much easier to target than me personally understanding trading into such a sort of V reversal type. I always struggle to see how you're going to trade through it. I always think you're going to go and do sort of a grindy move back through it, like sort of what we did here. You got a little V reversal, and you do a bit more consolidating before continuing. So also, this is the cash. So this is the cash session for gold. Sort of a different sort of picture, but we sort of had, again, you've got all the support in this zone. More of a rectangle breakout, these highs. So what we did, we gapped up, gapped up sort of not outside of it, but just below this high, and then you could look to attack the high. We did have a big squeeze beforehand, which I'll explain in a moment. But that's the sort of another avenue to go and look at is the cash session, especially having the big range, judging where you can sort of execute better. Maybe if we opened here, it would have been a different scenario than, you know, like where we gapped up and we just basically opened and drove and with a big squeeze and then go again. But it's sort of just all that positioning there. Everyone that's short is obviously then you're getting squeezed out, etc. Just trying to picture a bias on the bigger time frame. When you get these bigger moves, you don't want to be then getting out like I did specifically so this is a 15-minute throughout the whole day. Eventually had that big rally. So what me specifically was doing was I was buying this part and sort of getting in a bit too late. Not necessarily too late, but I'm going on the first move when your key point was obviously buying the dip, test backing into this little block that we had after this morning's just holding. Sort of, there's your sort of support, and then you get some more here. I think your key point as well, as I'll show you on the footprint, is you can really buy down here. Well, I think it might have been this one on the footprint. You can get really, if you know, concentrating. Obviously, you being so patient throughout the day just to reserve your energy after you're trying to play the first part, which, you know, you may lose or make something on, and then you get the big squeeze, and then your second point of entry is, you know, this point, testing back in the range. Just you want to see it hold outside and all stick to your plans overall. So also the other thing like I was saying was the metals. So this is silver. You also had platinum and palladium doing exactly the same thing on that day. I think platinum, or one of them, was up 8% at one point. So again, we've had all of this value in sort of this red box, this blue box. We've got all the highs. And again, we've had sort of a bit of consolidation overnight through the EU session before, you know, we get the big explosion. That sort of grindy support, the same as what gold was having. And even though you had sort of quite a real poor low down here, you've managed to hold this part. You sort of had that like P-shaped type day, and you get a sort of double distribution that holds. And again, you sort of then filling out the top of this little cave we've got here, sort of with this area. So then you've got that support to then sort of attack this high, especially sort of this little bunch. I was saying, it's like going back into all the thin, not much volume, how you're going to trade through that. I wasn't expecting it to just do this. I always think it's going to like spend much more time before you trade, and then you sort of target this high, and then eventually you can be looking at the previous high sort of back up there. So it's just understanding when, for me, is, you know, when you're having sort of nothing's necessarily, the risk isn't moving, so you haven't got the equities moving with it, then having a look at what the metals are doing. Like for me today, looking at gold is really struggling to go higher, but then equities are dumping at the same time, like we did this morning. But then if you look at where the metals are there, the metals are at their lows. So you've got silver and platinum and palladium all coming off. So maybe if the gold, for me, isn't being able to go higher today when the equities are coming off, then you might see more of a metal type move, and sort of the silver, the palladium, platinum all dragging gold with it. And that's the sort of thing you want. And then gold sort of in its own mind of itself. So it's just something else to keep an eye on, where you can then take advantage of that when the others are not moving. So what I've noticed is that when the S&P goes risk on, like we've had today, gold will come off much more aggressively than vice versa. Just in a bit more detail, I know this looks pretty messy, but again, this is sort of the 5-minute structure. So this is on the open, sort of this move. that block trade that you get, break of the range. I think this is where I was buying, and then I was holding, and then I got squeezed out, and I never bought back down here. So then you're looking for that real drive, and then you get sort of the 230 open, which is sort of in here, which is pretty much nearly the bottom. And then you get the US Open and drives high. You sort of get this little delta point in here. The delta was sort of not really driving and coming off, and then you sort of get more of the delta drive on the next zone, next area. Sort of then it sort of drifts its way up higher. So the first target I had was here. Past there, for me, you just stick to your trade idea, and if it goes, 6 points past, you're not ever going to really expect the market to go 6 points, or even an extra point it might. And you try and play the continuation, maybe with much smaller size, which is what I didn't do. As soon as it hit my target for the day, I didn't necessarily know specifically what to do. But these are all different factors of putting different things all together at once. And then this was the footprint. So what we had, this is quite nice to see when you got this big absorption zone we're sitting in it for pretty much exactly, I think that's an hour, or that's 1 hour. I believe that should be 1 hour. Delta's not massively negative on it, only minus 120. You got a lot of 7,000 volume, for a whole hour, and then you're looking for the breakout of this, or you're looking to sort of buy in this bottom part, and then looking for the shift up and shift and change, which is exactly what we got. You're getting that absorption again. You sort of got the buyers are slightly willing to buy here, but being held up. So as soon as you come back and trade through that, then you get the move higher, and it does a lot of rotating. This sort of move that I mentioned before can be quite painful because you're just meeting selling on the way up. And it's quite difficult to hold and then execute more size. So you want to be executing it in sort of this area if you can, just watching specific parts of price action just to lead you in, watching the trade back, etc. Not having the bias, and then I think this was that first move, and then you get the pullback again. But just different things, or matching different things, just having an extra sort of deeper thinking of what could I have done better. Maybe if it was me, I would have started to buy a bit earlier, which I didn't necessarily do. This was sort of your key entry point for this trade specifically. Moving on, execution performance last week was actually quite good, to be honest. I didn't take, too many trades, I don't think. It was quite quiet compared to this week. It's a big adaptation of, obviously the volatility and the VIX has gone through the roof. But I was taking much smaller trades, sort of just buying dips, new highs, new lows, etc. So for me, I just wanted to just keep it simple, go back to sort of the basics and just put something on, target a new high, instead of trying to have real high conviction, then trying to buy, and then it's more choppy move than trying to then put loads of size on, and then you're messing your trade up, and then you're going 10, 6 offside, 15, and then you're coming back. They're the more painful ones. There wasn't many key areas for me to then trade breakouts and be really aggressive into highs, except on the Friday move that I showed you last week. Self-talk wise, it was positive, probably one of the most positive weeks I've had, considering I was going up and down at times, losing, making. But it was more of a consistent week again of, just Monday was not great, and then four green days. So coming back from that, finishing the week well as well is always helpful. But yeah, exactly like I say, more fight through the day. So you're using a lot of energy. So you want to then restore that for them being aggressive on comments, etc. And when correlations and bigger time frame plays come into more action, especially like this week, you've got to be quite. I know it's a lot more volatile. There's a lot more chances, but again, you just want to take your time. You're going to miss moves, of course you are, and then try and take action when it's all ready. Performance-wise, this week, as you can see, I didn't trade much. Usually you might see up to sort of 15 trades in one day, so that was only 9. not much trading in the morning, but when I did quite well. We had a lot of flow. I think it was last week in the mornings, or might have been this week. Then don't trade for a little bit, make a bit, then I'm trying to be a bit more patient and sort of secure of what's going on. Trade much more in the afternoon, and I don't trade very well. As again, that volatility changes, and obviously then I adapt into something in the afternoon, and then I can do okay. Bit more on the sort of much less trades, but yes, there's 19 losses, but I always think for me, I'm always probably looking at that, going to have more losses than winners, but then trying to take advantage of the 9 winners I did, sort of in the holding area of the trades, rather than taking a lot of, quicker losses. Didn't trade gold particularly well last week. Didn't trade it that much either. Oil was much of the better market for me. So this is where I was sort of, obviously, more of a broader range of where I was doing okay. Comments on those reaction trades where you're just hitting nonsense wasn't great, and then sort of breakout wise, a few reversals, a few scalps on things was much easier. Just more of a broader variation of how I was trying to go through things. See, mainly this one was the Friday move on the pre-cash breakout. That seems to where I seem to be doing okay at the moment. The cash, when it brings up a bit more volatile, I seem to be struggling like we're doing here, not adapting to it quick enough is something that I need to be working on a much more sort of basis, understanding your moves are going to be bigger, sort of the different volatility change. Some improvement areas for this week. More of understanding sort of building my positions. Like last week I was keeping it simple, so it's then building on top of those when the moves are bigger. Not to worry about like the P&L increase, etc. That's like I've got here, sometimes what I do is rush the trade and you worry about the P&L too much of when you're adding in size, and then you're trying to manage it, like especially this week for me, trying to manage a trade where you take quite a hefty loser and you're trying to understand to accept that you can take a bit more of a risk on something. Not to worry about that and frustrate yourself on that. Keep watching some price action, having more confidence in those sort of ideas when you're watching it, so you can add in, etc. Not just relying on other markets to flow, just small little increments when you're seeing like a specific buyer, etc. Slow down trading in the afternoon and picking more efficient and better trade ideas. When it gets a bit more volatile, just take your time to be involved. I keep trying to obviously trade like opens and things, trying to use the cash sessions on where they're going to be jumping about, especially like we have at the moment, gold, etc. You're gapping quite far and it's quite hard to justify what's going to be going on for me personally. And just be more awareness of those trade entries, especially like that entry there. You just need to just be awake, be more aware, and then try not to think you're forcing my ideas when something, say I missed the first possible chance to take a loser, and then there's another chance or 2 chances straight after that you can have another chance to get in. Not to think that you're over trading and forcing something when you're not. That's just one of these little things I have. Yeah, and keep adapting to the market as it changes for more opportunity, especially like this week. One quiet week to one really volatile week. Just how you can adapt and then try and take advantage of next time when it happens. Anyway, that's it from me this week. I hope again that's sort of a different move on gold when you can look at the metals as well as using risk on and risk off scenarios when they possibly aren't working, and when gold's in its own zone with its other metals, especially copper obviously doesn't really go in the same direction as in the risk move, but when you're looking across those other markets, silver, platinum, palladium, worth having a look at when you're trading gold at times when the structure might be in their favour, even gold's favour sometimes, and they all match up. Can be really efficient. But normal information, if you want to get in touch, info@axiafutures.com, and I'll be back next week, guys. Have a good weekend. Cheers.